Friday, November 4th, 2022, Bernanke 64, home of alternative economics and contrarian views. So yes, I've been warning about hyperinflation for the last few years on this channel. And I even warned friends, colleagues, family before I started this channel. And we're going to touch upon hyperinflation today. And I think it's fairly significant that one of the biggest hedge funds in the world, or at least a $50 billion hedge fund, is now warning that the world is on the road to hyperinflation. And yes, I even have a playlist if you want to go onto my hyperinflation files. There's 37 videos there, but we will cover hyperinflation today briefly and what I think is happening. Before we do that, though, I'd like to recommend a book today. Many of you like the fact that I recommend books, and I've recommended the book that I'm going to recommend today many times before. But as we know, the channel is growing. Some people might not have heard of this book, and I think with the situation the way it is today in the world, politically, and also hyperinflation-wise, I think it's very important that people read this book, The Law, by Frederic, Bastiat. And where can you get this book? Well, you can probably get a free PDF file online, but if you really want to get one of these, hard copy, I recommend you go to the Mises.org website. It's the website for the Mises Institute. Do I get paid by the Mises Institute? No, I just appreciate the Mises Institute because I've been following them for over 20 years. They have a great blog, great writers, and they need help because they're the ones who it's been through the Mises Institute that I've learned about the Austrian School of Economics, about small government, about sound money, free markets, about von Mises, about hyperinflation. If it hadn't been for the Mises Institute, I probably wouldn't be doing what I do today. So yeah, The Law by Frederic Bastiat. Let's quickly go through it, because I think the way the world is evolving politically and socially, we need to hopefully build a better world. And I think this is a great blueprint for it. So, yeah, they even say it here on the front, the classic blueprint for a just society. There you go. So let's just go through the book fairly quickly here, what they say in the on the inside jacket. The Law, Frederic Bastiat. And this is one of the things he said: it is impossible to introduce into society a greater change and a greater evil than this, the conversion of the law into an instrument of plunder. France of 1850 was in political turmoil. In the aftermath of the Revolution of 1848, the tide of socialism was sweeping the nation. One man stood alone against the tide. The precocious son of a merchant, Frederic Bastiat, devoured the writings of free trade economists such as Adam Smith, Jean-Baptiste Say. Rejecting the popular notions of his day, Bastiat began to speak and write against ideas he believed were undermining natural harmonies of interest among men. First as an orator and essayist, later as a member of the Legislative Assembly, he became known for withering logic and devastating wit. He also became isolated politically. The struggle between left and right was for power and plunder. Yet Bastiat believed that the only purpose of government was to guarantee individual rights and freedom. This is what he said. This is really interesting. The state, he declared, and perhaps his most memorable epigram, is that great fiction by which everyone tries to live at the expense of everyone else. Does it sound familiar? So yeah, it's not a long book. You probably finish it in a day. It's only 76 pages. So there you go. I'm going to put a link to the free PDF and a link to the Mises Institute as well. Link to the book that you can get there in the description of this video. So, hyperinflation. One thing that I think people need to know about hyperinflation is that it's not current CPI rising and costs pushing prices higher, even though that's what we're getting now. Hyperinflation is a step further. It's when the general public realizes that the central banks and the governments are never going to stop inflating. And by inflating, of course, I mean creating currency and credit out of thin air, like we've seen the central banks do since 2009 or thereabouts. Deficit spending, programs that we see nowadays to try to stop inflation by spending even more, which is crazy, which is what the Germans did in 1923. So, yes, when people realize that that's never going to stop and that the debt will never be paid. And yes, the Chancellor in the UK is saying that they're going to pay down the debt, but listen carefully. He says we're going to lower the debt as a percentage of GDP. That's what they're trying to tell you. But it's when people lose confidence in the currency, they realize that the central bankers and the government can never stop inflating. And we saw 2 days ago, Jay Powell in his press conference say, yes, if we over-tighten, we're going to use our powerful tools again. Well, what are those powerful tools? Well, they're the tools of money printing, creating reserves out of thin air, manipulating interest rates, and more deficit spending by the government. And when that happens, the demand for the currency collapses. And that's when the currency loses value. What does that mean? Well, people will want anything but the currency, so they'll try to exchange it for anything. They'll try to spend it as quickly as possible. And that's when you have hyperinflation. But it's more than just a monetary phenomenon as well. People have to lose faith and confidence in their leaders. And I mean, I've lived for 50 years plus, 58 years, of course. I grew up in a country where we had hyperinflation in Brazil, yet there is very little faith and confidence in the political class in Brazil back in those days, 70s, 80s. But in Europe, what's going on right now is really unprecedented. Also in the United States, look at the division and the social division as well. Those are all symptoms of people losing faith and confidence in their leaders, in institutions, not just governmental, but academic, the press, mainstream media. And the other thing that's really important about hyperinflation, and we saw that in Germany, is the amount of debt in the system. The debt becomes insurmountable and they have to keep the debt going, so they keep issuing. So that's my brief description of hyperinflation. There are a lot of symptoms, of course, and I'm not going to go through them. You can go through my playlist. There's 37 videos there, and in one of them I've talked about all the symptoms. So I wasn't too surprised when I saw this article yesterday, and it's in the Financial Times. I think the Daily Telegraph published it afterwards because I think it's fairly significant. And it's Paul Singer. Well, Paul Singer, he founded Elliot Management, He declined to comment for this article, but suffice it to say, Paul Singer is a very well-respected investor. He personally is worth over $4 billion according to Wikipedia. So let's quickly go through this. Hedge fund Elliot warns of more pain to come after 2022 market rout. Prominent asset manager says hyperinflation could spark one of the worst crises since the Second World War. The world is on the road to hyperinflation and could be heading towards its worst financial crisis since the Second World War, according to Elliot Management, one of the world's biggest and most influential hedge funds. The Florida-based firm, which was founded by billionaire Paul Singer and manages about $56 billion in assets, has warned its clients of an extremely challenging situation for the global economy and for financial markets, where investors will find it difficult to make money. Yeah, it has been a difficult 2022 for that. An extraordinary set of financial extremes that come as the era of cheap money draws to a close. I agree with that statement. I think the secular bull market in bonds is finished. We're in a secular bull market in interest rates, or bear market in bonds now, has made possible a set of outcomes that would be at or beyond the boundaries of the entire post-World War II period. It wrote in the letter, which was seen by the Financial Times. I quote here, "Investors should not assume they have seen everything. Just because they have experienced financial crises, such as the 1970s bear market and oil price shock, the 1987 market crash, the dot-com bust, and the 2008 financial crisis," it added. Yeah, it says here, sorry, not Paul Singer declined to comment, but the fund itself, they didn't comment to the FT. The group's warning comes during a dismal year for markets in which global equities have shed 28 trillion in value, according to Bloomberg data, and bonds have also tumbled, leaving investors with few places to seek shelter. So you might be asking, during a hyperinflation, or the crack-up boom as it's also called, everything goes up in value and the currency collapses. Well, we could still be on the way to that. Maybe the next time the Fed and other central banks reverse their tightening and use their powerful tools again, maybe that's when we're going to get it. Who knows? This is the part that I thought was really interesting, because I've been talking about this for many years. I've been highly critical of central bankers because I think they've been dishonest, as you'll see here, about inflation for decades. They have tried to and still trying to tell people that inflation is the CPI. I watched the press conference from the Bank of England yesterday. They never mentioned all the QE they did in 2020-21. None of the reporters asked them about that. And they're still blaming supply chain and Putin for the inflation. So this is why you'll see I agree 100% with this next comment. The fund manager laid much of the blame for the looming crisis on central bank policymakers, which it said had been dishonest about the causes of high inflation by blaming it on supply chain bottlenecks in the wake of the pandemic, rather than on ultra loose monetary policy put in place at the height of the coronavirus crisis in 2020. The world is on the path to hyperinflation, it said, which could lead to global societal collapse and civil or international strife. While such an outcome is not certain, And as I said many times as well, yes, nothing is certain in life, but I think there's a high probability now. This is currently the direction the world was headed. It added. So I'm going to stop right here. I'm going to put a link to this article. It is in the FT, but I'll put it under Archive PH, so you don't have to pay or have a subscription. You can read the whole thing. And so how come I've been warning about hyperinflation for so many years? What triggered my detective mind, or whatever you want to call it? Well, it was a speech by Bernanke back in November of 2002. And by then, I had been firmly immersed into the Austrian school. I'd been reading about monetary history. I had bought my first gold coins back in the summer of 2002. And when he gave the famous so-called helicopter speech, and knowing that Bernanke was on his way to become quite influential in central banking, I thought to myself, this is very dangerous. This is going to end in tears. Did I think it was going to take 20 years? Honestly, not. I thought it might happen after the '08 crisis when they did a load of QE, but that's the thing with the markets. They can remain, and economies and currencies, they can remain irrational for longer than you can remain solvent. That's paraphrasing Keynes, who is not one of my heroes in economics, but in that sense he was right. But yeah, maybe, yeah, it's taken 20 years. In Germany, it took about 9-10 years, because they started inflating the system to pay for World War I, 1914, and then the hyperinflation happened in 1923. The Reichsmark collapsed completely. People lost faith and confidence. Maybe because it was the only country doing it, so it didn't take as long. But now the whole world is on the road to hyperinflation, and that's why I think it's dangerous. So there you go. With that, let's quickly look at where the markets are this morning. Yes, we have non-farm payroll data, jobs data later on today, 8:30 a.m. Eastern time. It's going to be at 12:30 London time today because of the time difference. Usually it's at 1:30. So we've got spot gold, 1648. It's up almost $20 actually. It's up over 1%. The high's been 1650, low's been 1625. Silver, really interesting yesterday. Watching the screen, everything was red except silver. Very strange. Could the physical shortage be starting to affect the paper price? It might be too early to say yes, but right now it looks pretty good. So we've got spot silver at 1980. It's up about 35 cents or 1.8%. Key level in the spot price is going to be 20, of course. We've knocked on that door a few times this week, and we failed. The Dow futures is up 96 points, 1/3%. NASDAQ 100 futures up 0.5%. S&P is up 1/3%. S&P future. FTSE is up 0.75% at 72.36. The Euro Stoxx 50 is up 0.75 as well at 36.17. To the currencies, sterling is up just under 0.5% at 112.09. The euro is up 0.25% at 97.72. The dollar is down 0.5% versus the yen, 147.60. Dollar is down 0.25% versus the Swiss franc at 101. And the dollar is down 0.2% versus the yuan at 728. The dollar is down slightly versus the ruble, around 62 50. Aussie dollar. Aussie dollar is up 1%, 63.52. The dollar's down 3/4 versus the Canadian, 136.44. And the Kiwi dollar is up 0.8 at 58.15. To the general commodities, WTI crude is up 2%, 89.50. Brent crude is up 1.8 at 96.08. And high-grade copper is up 2.5% at above 350. And U.S. nat gas is up 3% at 625. Let's check the TTF gas futures. That's up 3.4% at 130. To finish off, let's quickly look at the bond markets. We've got the UK 10-year yield down 1 basis point, trading around 3.5%. We got the 30-year down 1 as well at 370. And the 10-year yield is up, well, it's unchanged at 413. And interesting that the 2-year yield, I think, spiked to 5% yesterday. I'm not sure if it really traded there, but right now it's up 1 basis point at 472. So the curve is definitely inverted, even from on a 3-month to 10-year basis. It's inverted. So that's not a good sign. That's a sign of a recession usually, even though policymakers and politicians are going to deny it up until November 8th, I guess. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And with that, I wish you all a great day and a great weekend. Take care. Bye.